Hello everyone, welcome back. In this video, I'm going to be covering how I made $1,400 today trading my one setup for life. I just covered 2 days ago the one setup for life step by step, explaining the entire model with everything you need to know. The first trading day after making that video, I executed on that model. That's why it's the one setup for life. At the end of the video, I'm going to include the sped up trades. You can see the actual executions. If you want to see the full breakdown, my thought process step by step as I'm taking this trade, the full clip will be uploaded to the education channel in our free Discord. So if you want to see me entering, putting a stop loss, taking profit, managing the trade, calling out what the market should do candle by candle, check out the education channel and you can see me walking the market on a tight leash using the model I shared with you guys. Let's go ahead and get into it. So as you can see here, AMP Live, real brokerage, no funded accounts, none of that demo, no funny business, real money coming in and out of these accounts. So let's go full screen here. So zooming out, we're going to start from the 15-minute chart. Generally, Dylan, I'm used to you starting from the weekly and the daily. This model does not require higher time frame bias. If you have higher time frame bias, it's even better, but all you need is the 15, the 5, and the 1 minute as I taught in that video. So now looking at the 15-minute chart here, we start from 9:30 because that's the opening of the New York section. So you can see the long setup here going long inside this candle and then covering above these highs here. So I'm going to take the executions off and then we'll revisit that at the end. All right, so going into 9:30, right, we're capitalizing on liquidity runs from 9:30 to 10:30. Again, it's a 60-minute window. What we're doing at 9:30 is we want to see what liquidity do they run to first, because that's going to tell us what the rest of the morning is going to do. So we see here at 9:30, they open the market and then they sink it lower into sell side here and here. What you'll notice is S&P does not take out a lower low. I covered in that model that SMT is helpful, but it's not required. So if I'm already bullish because 9:30 gave a manipulation lower, and then I see an SMT, it's even higher probability, but it's not required. So we see 9:30 opens, we drop down into sell stops, and also below that midnight opening price. That's going to allow smart money traders that are aiming for these highs here to go long in a deep, deep discount. We're expecting the market to drop, and then we're going to capitalize on the repricing to opposing liquidity. If you open up your eyes to what the charts are doing, exactly as I instructed in that video, you take off all the nonsense on your charts and you just focused on time of day and where's the liquidity, the markets are going to become so clear to you. So at 9:30, the market opens, we drop into sell side below the 9:30 and the midnight opening price. And then we get an opposing run into the buy side here. And then we see the same thing on E-mini S&P with these equal highs here. So we're bullish for the equal highs, but what do we want to see first? How does smart money look at price? We want to see it drop first because retail is going to want to chase that and look to go short, or they're already long and then they get stopped out ahead of the real move because they don't understand time and price. All right, so now dropping down into our lower time frames here, we see we have the 9:30 opening price, and then we see the market sinks into this sell side here and this sell side here. That is the Judas swing or the fake run. Again, it's the Judas swing because it's taking traders to the slaughterhouse. Traders are chasing this short, or again, they're already long and then they get stopped out and they're not able to capitalize on the true move. So once we saw this drop lower here, I was immediately thinking, okay, this is the Judas swing, then the market's going to want to work higher for buy side. I was seeing this here on the E-mini S&P. We'll go over to ES for a moment here. I saw ES dropping, and then I was going to go long inside this breaker, right? Because the market dropped, took out sell side liquidity, right? So the market drops, takes out a low, and then we're looking for a change in order flow. So we have this up close candle and this fair value gap closed above. That's all you need to go long. The reason I didn't buy S&P inside this bullish breaker, which I was looking at real time, was because of the risk to reward. So now the third step in the model is after the manipulation, then the change in order flow, then you go long targeting the opposing liquidity using risk to reward. But if you look at the risk to reward here, entry on the order block, my stop would have to be below 50% of this candle. That's because this is a balanced price range. So we should see institutional order flow entry drill or this gap not traded into at all. So I should have the stop below consequent encroachment here. And then I would aim for the buy side here. But you see that doesn't give me a 2-to-1 risk to reward. So the stop loss was too wide. So I passed up on this trade, not because I couldn't see that the market was going to run from this breaker to the buy side, but because the risk to reward wasn't worth it yet for me. So what I did was I waited, let the price run develop, and then what I was going to do was go long inside this fair value gap, but then I saw S&P was already close to the buy side. So then I used NASDAQ as the sixth sister, which what does that mean? The difference between SMT and sixth sister is SMT is S&P took out the high, NASDAQ didn't, so we're going to drop. But if we're bullish, because the model suggests we should look for higher prices, then it's going to be 6 sister, which just means that NASDAQ is going to look to catch up to what the S&P has already done. So S&P's already booked these 15-minute highs here. NASDAQ is not. So I'm comfortably going long inside this bullish order block looking for this run here. Why'd I wait for the order block? Simply because I needed the 2-to-1 risk to reward. So what I did here, put on the executions, went long inside the down close candle here, stop below the low, and then I closed out at the 49 3/4, which is right here. And then let's move that up just a little bit because the fill was right here. All right. So 2.2 risk to reward. So entering here on the order block, stop below this low here, and then I reduced the stop loss as I was in the trade. So I actually was able to reduce it to the body of this candle. Reason being is because we have 3 PD arrays, right? We have a fair value gap here, order block, and then we have a daily fair value gap low, which I'm not going to cover in this one. So there were several levels for why the market would turn here. So I entered inside the order block here, inside these down close candles, stop goes below it, aiming for the high, and this gives me the 2-to-1 risk reward ratio. Using the logic of 930 is a manipulation, below the 930 open and below the midnight open. This gives a real nice discount here for smart money that knows what they're looking for to go long below midnight opening and below sell side. We then see the market displays higher, shifts order flow because we have a fair value gap here, here, and here, all closed above. That's telling you order flow is now shifting. The market is going bullish. If it's going to go bullish, what's it going to attack? Buy side here and buy side here. Just a really easy scalp. So what you can see, looking at this time window here, it's all you need. I know a lot of people say all you need, but it's not really all you need. This is really all you need. So if we look at this time window here, we're going to make this black here. Doing this every single day, looking at this time window from 9:30 to 10:30, every single day there's liquidity runs. So this is a model that does not just form sometimes, not once in a while. Every single day, markets are running for liquidity during this time. And you can see it's one of the most active times that gives you the easiest trade setups when you know what you're looking for. And then we see here, now looking at a further timing element, these are all additional confluences, but not necessary. You'll see I'm also entering during the 9:50 to 10:10 macro, right? So we have sell stops taken here, right? We get above this fair value gap here. Why is that an order block, you may be asking? Because this fair value gap, we trade into it, but it doesn't reach the lower half. So that means these 2 down close candles become a bullish order block in my analysis. Sell side's already been taken. The draw is going to be these highs here. So I'm able to use that as a bullish order block to go long. And then inside the macro window, that's going to give me the volatility that's going to deliver into my targets. Every single day, this repeats. If you're not seeing it, it's because you haven't studied enough. Go into your charts, back test 9:30 to 10:30 every single day, and you're going to be amazed at the amount of opportunities you have. If you don't get a setup this day, you got another one the next day, and or the day after that, or the week after that. So there's never a reason to be concerned about missing a trade, about not capitalizing on it, because there's always price runs when you know how to read the charts. When you open your eyes up to what these charts are doing, there's unlimited money making potential, but you have to learn how to read the charts first. So again, guys, in summary, sell side at 9:30, that's the Judas, change in order flow, execute based off risk to reward. Hope this one was insightful. Much more of these examples coming. If because it is, again, a model I literally use every single trading day. Doesn't mean I'm trading it every day, but it's what I'm looking for every single day. And if it gives me 2 to 3 setups a week, I'm absolutely banking. Hope this one was insightful. See you guys on the next one.